Hello, my name is Altamir Sayed, and this is Deep Dive Pakistan, bringing you commentary and opinions from the leading voices of Pakistan's equity markets. Today on our show, we are excited to host Mattias Martinsson, portfolio manager and partner at Tundra Fonder, a Swedish asset manager specializing in frontier markets. We'll learn why Mattias is excited about owning equities in Pakistan, his framework when investing in this market, along with risks to be mindful of. So without further ado, let's get started. Welcome to the show, Mattias, and thank you for joining us.
Thank you for having me.
Excellent. It is our pleasure. How about we get started with our first question, Mattias, and that's really you telling us about Tundra Fonder, your fund's focus and your investment philosophy.
Yes. So we are a boutique asset manager. We focus, you can say that we want to be the alternative for emerging markets investors who want something outside China, South Korea, and Taiwan. We focus on what the World Bank defines as low income or lower middle income countries. And that today is approximately 3.8 billion people. Half the world's population, but their share of the world market cap is a couple of percentage points. So we try to focus on these markets, try to be the best on those, and then we leave the larger emerging markets to other global investors. And we take pride in being very stock picking focused, which also means that we normally work only with 8 to 10 markets at a time. So we don't try to do 25 or 30 markets, but rather we focus on a number of markets which we believe have an interesting theme. And Pakistan, since the start, has been one of our absolutely favorite markets.
That's excellent. Thank you for that introduction. And I'm going to use that as a segue and perhaps reiterate Pakistan is one of the few selected countries that's within your investment universe. Perhaps you could walk our viewers through what is it about Pakistan that gets you excited? What is your bull case about Pakistan? And why should global investors pay attention to this country?
I think Pakistan is not very different from any of our other markets. It means that it has a big population, a young population, and the main theme is kind of the rising middle income class. But Pakistan always had two features, which is not very common in the markets where we cover. And the first one is that its equity markets is actually quite well developed, as opposed to African countries, for example. So sometimes as an elevator pitch, when people ask us about Pakistan, we say it's like Africa, but with financial infrastructure. So you have the oldest listed company, it was listed in 1902. And despite kind of the prejudice about Pakistan, it was actually a brewery, so Murray Brewery, which I'm sure you're familiar with. So that's the first one, that you can actually you can choose your sectors and you can choose your companies rather than buy whatever is listed, which is many times the case. And the second is what we call the perception arbitrage. And I recall when I started looking at the market in 2005, and it was very close that I didn't even start looking because I had such a kind of very strong impression about what I thought Pakistan would be like. I saw gravel roads and camels in the streets and religious fundamentalism. It seemed like a pretty scary place. But the fact is that picture is still very common among global investors. Many global investors, they don't even dare to go there. And when you have that strong negative perception of a country, it normally means that it leaves a lot of value for investors who does their homework. So I think those two features, I think, is what differentiates Pakistan. It's not that Pakistan is much better than markets like Vietnam or India or Sri Lanka. It's just that it's much better than what people's perception is, and that is the main difference when you're an investor like us.
Thank you. Those were some fantastic points to get our conversation started. And as you know, in the investment world, risk tends to go hand in hand with return. And so you've outlined a bull case for Pakistan. And I guess my next question to you, to keep this balanced, would be what are some risks and challenges that you've encountered when investing, whether it's frontier markets in general and then perhaps specific to Pakistan?
I think the main problem normally for our markets is that as they are less developed, liquidity is worse than in large emerging markets like China. And liquidity tends to go a little bit up and down, which means that you might have no problems investing when times are good. But when times get worse, then suddenly liquidity can become a constraint. So the first aspect in general, I would say, is in terms of how well the equity markets are functioning. A second normally big problem is that the transparency is lower, which means that you need to do more of the work on the ground. That is why we set up our office in Pakistan in 2014, because we felt that there were so many companies that there were no coverage, and it was hard to reach them just sitting in Stockholm. So we felt that there was a great opportunity for us to have an office on the ground as well. And actually, one of my early meetings was a shoe manufacturer in Pakistan. And when I met them, they told me that they never met an asset manager before. And this was back in 2011. So not even a local asset manager had met them. So I think that is a challenge that you need to overcome, the transparency. For Pakistan in itself, I think the main challenge is, of course, the perception of Pakistan, which has led to the country being quite isolated, which means that it hasn't really developed its export facilities. That in turn means that the market is completely domestic consumption driven, and in good times consumption goes up, imports go up, and you end up in a balance of payment crisis. So I think the big future challenge for Pakistan is to break this isolation and be part of the global financial community, and also increase its export ratio so that it has better tools to manage these quite, we would call them boom and bust cycles. So I think with the new political leadership, I think they understood this, and we also think highly of the new central bank governor, who does not focus on protecting the currency, but rather kind of to make sure that the currency market is functioning. But historically, these have been big problems, which also means that even though if you look over time, the Pakistan equity market has performed in line with India's over the last 30 years. Only in the last 2-3 years, India has performed better. But India has managed this because they don't have these very strong boom and bust cycles, because the integration is better, and it means that you have a higher stability in the market. And when Pakistan reach that level, I think it is the perception from investors also will be completely different.
Those were some fantastic responses, and I'll just reiterate two big ones that you pointed out were transparency when it comes to companies, and perhaps some macro issues that Pakistan deals with from an export standpoint. And you've been able to speak about how you at least feel some of these risks are mitigated, whether it's having local presence by your team over there, and then perhaps some optimism with the local or the new government and the central bank. Two other risks, Mattias, that had come up in our survey with our viewers. One was liquidity or lack thereof within the public markets, and you alluded to that, but as well, devaluation of the Pakistani rupee relative to the United States dollar, especially for North American investors. And I'm curious, for these two risks, how has your team essentially mitigated this, if you have, as you look to investing in Pakistan?
Well, I think devaluation or currency risks, that is the most common mention risk that the foreign investors mention when they talk about any frontier market. And I agree with it. It is a problem, but it's in a normal situation when you allow the currency to be priced according to market. It is not a problem, because it's if Pakistan has interest rates of 10% and the US has interest rates of 0%, the rupee should depreciate 10% a year. If the difference is 5%, the rupee should depreciate 5% if you have a financial integration with the world. So I think as long as the valuation is gradual, corporates can plan accordingly, and we as investors don't have surprises. So I think that's also why when you saw lately when the central bank allowed the rupee to depreciate, they didn't surprise anyone. It was gradual. And instead of historically trying to protect your currency until the faith is completely lost, the currency is overvalued, that is when you run into problems. First, you try to protect it, you try to kind of squeeze imports, you try to regulate the capital flows, and then you end up losing anyway. So I think having a freely priced currency, that is, I think that's the main achievement that the new central bank has at least expressed that they want to do. And then you don't have a problem, not for us at least. And I think also in the long term, what you should consider is that I don't think you want to hedge your currency in these markets, because long term, the currencies will not depreciate as much as the inflation differential. And there is a logic behind that, because if you said that the currencies should always depreciate in line with the inflation differential, then you would basically be saying that the price difference between Pakistani goods in Karachi and in New York will always be the same. A tomato will not always be 1/50th of the price in Karachi versus New York. So long term, you want the currency exposure. That's going to be part of your investment.
That's a fantastic insight, and thank you for sharing that. I'm going to just perhaps ask you on the liquidity front, especially, I believe, and this could have been research that I did about a month back, and it spoke to, I believe there are 15 or 16 publicly traded companies in Pakistan that have a daily traded volume exceeding $1 million USD. And I don't know if that still is accurate given the current markets, but I would ask you, does that limit the number of companies you as an asset manager can invest in, and how do you deal with that?
I think it is a problem, liquidity. But again, if you look back in 2005, for example, when I started following Pakistan, the turnover daily was regularly $500 million to $1 billion. At that time, it was in line with Singapore. So I think Pakistan has a history of good liquidity. And I think that's because you have the local pension funds, you have the state pension funds, and you have experienced investors who have been in the market for a long time. So I think that's one aspect of it. And lately, liquidity has been somewhere between $50 to $150 million a day, which is low. But if you compare to markets like Nigeria, Kenya, Sri Lanka, then liquidity is much, much lower than that. So I think if you're an emerging markets investor, it's a big problem. I can understand that. But if you're like Tundra, you focus on these kind of markets, then I would say the liquidity in Pakistan is actually quite good. It does mean that your universe is smaller. For us, for example, instead of working with 20 companies at a time, we tend to have somewhere between 40 to 60. And that's because we want some of these smaller companies, but liquidity does not allow us to take too large positions in them. But we can still invest in them. We normally say if we have a strong conviction and we can reach at least 1% of the fund, it's worth taking the exposure. Back in 2013, 14, when we started our Global Frontier Fund, then you had some of the absolutely best performers were kind of the mid and small caps in Pakistan, and returning 500-600% in a year or 2 years time. So it means that your exposure cannot be as big as you want to, but you can still invest.
Again, thank you for that. I think that assuaged a lot of concerns that had come up amongst our viewers. Um, our viewers would be very eager, Mattias, and if you're willing to share your investment framework and the major themes that you focus on when you consider the prospects of a Pakistani company. And so I would just ask you, is there sort of a high-level framework that you look at when you're looking at an investment in Pakistani equities?
I think first of all, we're very fundamentally focused. I started with equities when I was 10 years old, and one of the first things I learned was DCF analysis. So I think that's kind of the starting point. We buy companies, we don't speculate in stock movements. What we do want is that we want to capture the growth in this market, and that means that we normally invest in sectors which we believe will be more important in the future, which will have a higher representation of the economy in the future. So that could be anything from pharmaceuticals, for example, where consumption today is too low versus where it will be in 20 years. It can be the IT sector, it can be education, etc. And provided that we have the sector that we believe that will be of higher importance in the future, then we simply try to find one of the best companies. We normally say one of the top 3 companies that can either maintain their market share or increase it over time, in our view. And the thirdly and the last point is that there also need to be an opportunity. So we need to understand why we are able to buy this fantastic long-term story at such a cheap price as it is today. And what we have learned, what I have learned from my 25 years or so in emerging markets, is that the best time to buy companies is in bad times. So the favorite theme for myself is to buy great companies in times when the underlying market is performing badly. And given that we're very fundamentally focused, we tend to be a little bit early when we go in, and we tend to be a little bit early when we go out. But I think there's a fantastic gap there in between when you can actually buy the companies that most investors at that time are not very interested in.
That's a great point, and I would perhaps say that last year and this year seems to be the right time for your fund to be making some of those investments in Pakistan.
It sure has, and we released the report mid last year, which was a LinkedIn article where we had a headline, "Pakistan, if not now, when?" And I think it was a classic case. And then, of course, COVID-19 came in between, etc. But I think there's an amazing story building up there, and perception is still at such a low level that the perception arbitrage will probably be the most interesting point of that journey.
That's excellent. You mentioned some industries, especially, that you would be interested in moving forward. Are there some companies and industries that you would not be as interested in when it comes to Pakistan?
We tend to refrain from companies that are involved in sectors where we don't really see a natural advantage. For example, over time, we have little exposure to fertilizers, for example, because we couldn't really see the point of Pakistan as at the time being an energy importer, producing fertilizer for locally. So, and we've also been tend to be skeptical. We don't invest in fossil fuels, for example. It's actually stated in our fund rules that we don't invest in energy exploration or even refineries. We don't believe that fossil fuels in the future will have a higher share of world GDP. So I think those are sectors that we would not be so interested in.
Excellent. Thank you for sharing that again. On the same front, and we're keeping it within this investment framework, and I'll go one step further and ask, would you be willing to share with our viewers a Pakistani equity investment that you've made in the past that turned out to be successful? How did you come across this company, and what attracted you to invest in it?
I think one of our favorite stories is an IT company called Systems Limited. And they were listed back in 2015. Our team met them a couple of months later. I think first of all, we strongly believe in the potential of the IT sector in Pakistan. And you only have to look at India to understand that Pakistan could do something similar one day. And we came across this company where we were very impressed by the management, the CEO, Asif Peer. It was also one of few companies where you had a very strong connection between those that were running the company and shareholders, because around 80% of the company is held by its employees or former employees. It was also a company, in their case, that you had a large share of exports, which is not very common in Pakistan, which also meant that you had some diversification in the portfolio for us overall. So it has been very successful, but I think they're still at the very early stage of their journey, and we look forward to follow them on that journey. I should also say, having said all these nice words about them, that we are one of the largest shareholders. We've been so for many years. But I think it's a company that deserves more attention than it has gotten so far.
And thank you very much for that disclosure and sharing details about the company. And as always, to keep it balanced, I'll ask you the flip question. Could you perhaps speak about an investment in Pakistan that did not go as per your expectations? And if you were to think about a major learning that came out of that process, what would that be?
Well, I think the biggest mistake we made was as elections in 2018 approached, and a couple of months before elections, we concluded that Imran Khan might actually win, which we actually until then did not believe could happen. So the normal for Pakistan after elections is that you go to the IMF, you do a devaluation, and you restart the economy. And we wrongly assumed that they would do the same this time, which meant that we much too early bought into cyclical stocks, cements, steel companies, etc., which were already hammered, but which fell obviously 50% more after we entered. So that costed a lot of performance. And it's also, I think the lesson is that sometimes patterns are broken, that you don't always repeat the same cycles. So I think that's the biggest mistake we've done.
Thank you, and I appreciate the fact that it's one that's in the very recent times, so it's one that a lot of our viewers can relate to. Thank you for that, and I guess one of my final questions as we conclude the interview here, Mattias, is you mentioned discounted cash flow as one of the mechanisms you use to value a company, and that really means looking forward in a company's future to understand with confidence what their earnings and cash flow would be. And so really my question would be, what resources could you point our viewers to as they do similar due diligence on Pakistani equities?
I think one thing that struck me already back in 2005 was the fact that you actually have a number of very good sell-side firms in Pakistan who are experienced and have been around for 20, 25 years, some even longer than that. So I think that's always, you should never trust just one sell-side firm, but if you have a number of them, I think they're a good resource. Another, I think, special feature with Pakistan is that the Pakistan Stock Exchange has a very good data portal where you can find all your annual reports, quarterly statements, etc. I have not seen any other market that we cover that has similar quality in terms of which data they provide. So I think that would be a very good start. One thing to consider for foreign investors is that who use Bloomberg is that the Bloomberg data is very incomplete, and we've discussed that with Bloomberg. And the fact is that they only provide full data for companies who are included in the KSE 100, which means that 500 other companies you don't have accurate data on. So I think that's something when you do your screening in Bloomberg, which many foreign investors do, that they need to consider that they will not catch all the companies, but they will catch just a few of them.
Perfect. Thank you for that. And really my final piece here for you, Mattias, would be, as we have some viewers who perhaps would be more interested in actively managed portfolios rather than making the move to Pakistan directly into the equity markets themselves, how would one go about learning about your fund, and perhaps how does one invest in Tundra?
Well, I think we have a daily traded frontier strategy where Pakistan is the biggest market. That fund is open to any investor. As the European regulations are, we are not allowed to actively market it outside certain countries. But we have investors from all over the world who found us on their own. So we can't prevent anyone invest there. They can invest $10 or $10 million. It's daily traded, and it's kind of anyone interested in this part of the world. But they will not see us market the fund outside Sweden, Norway, Finland, and Switzerland.
Well, thank you, Mattias, for sharing these insights with our viewers. In our show notes, I have made available the website for Tundra Fonder, where viewers can find monthly commentary on the Pakistan economy. As well, I'm going to include Mattias's Twitter handle, if that's okay with you, Mattias, for individuals to follow you on that platform. Perfect, excellent. And as I end this interview, I'm going to turn this over to you and say any closing thoughts for our viewers, Mattias.
No, I think that those that are interested and those that are listening into this already, I think, have come a little bit on the way. I think everyone should do their own homework on Pakistan. And you should kind of clear your head before that from any prejudice or any guys like me who will be very optimistic. But you should also clear it from the very negative picture that you sometimes is painted. Do your homework and see what you think.